is the stock market going to go lower? So what we're going to do today is take a look at the SPY, the S&P 500. Today, not a horrible day, but not a great day either, right? So we were down just about a percentage point, $3.64. Now we did close at $364.31. Currently in the after hours, we are trading about 50 to 75 cents lower than that. Now I brought up something in the Discord today for all of the community, and I kind of let everyone know, if we kind of go back in time here, go all the way back here to 617, you can see when we bottom ticked here at 362.17, we had this nice little bit of reversal where we kind of went on a 3-month or 2.5 month kind of bounce, right? So we went on this 2.5-2-month bounce here, and then we kind of topped out at the 200-day moving average, which obviously if you guys are well versed in technical analysis, you would know that the 200-day moving average is the granddaddy moving average supply zone of them all. Now, if the SPY would have been able to reclaim that, kind of put in a new high, back test that, consolidate, and push higher, I would then say that the bear market would be over. Now, obviously, if you don't know technical analysis, you could have been someone who was constantly buying at the top, getting a little excited that we're, 1 month in the green, 2 months in the green, thinking that everything is going to go back to normal before we get rejected, and then have been on this about a month to a month and a half bit of downturn here. Now the downturn has been pretty aggressive. It did not take as long to come all the way back down as it did to go all the way up here. So what I want to kind of focus on here is today we did close below this linear regression channel line here. So what I'm looking at is the daily time frame. Today's lows is right here, just shy of that $362.17. Now, there's one of two things that are going to happen here. A lot of people are going to say, the SPY is ready for a bounce. That's the end of this selling. We're going to consolidate and move up from here. That point could be valid, but we also have to understand here, every time that we put in kind of these new lows, we get a nice little dead cat bounce followed by a continuation flush. We get a nice little dead cat bounce followed by a continuation flush. We get 3-4 days worth of consolidation followed by a flush. So yes, it is entirely possible that we could maybe be looking at a 1, 2, 3 day, even a week long dead cat bounce. And I would be trying to target prices if you are going to trade this back up to the long side. This is how I would play it. I would use $362 as my absolute stop loss. If we do break that and close below, I would exit the long trade to the upside. But what I would be doing here is starting a position here. If you are going to play the bounce, I would look to add into your position here. Obviously, I'm going to be taking profits over today's and last week Friday's highs. I would just trying to be target something very, very small, $372. That is the 5-day moving average. I would look for some sort of rejection. If we do confirm that and decide to go a little bit higher, I would be then looking for the next price target of around $380 to $382. Now, anything below $382 and even $390, $388 does not mean that anything has changed to the downside. We could, for example, bounce from here, $364, all the way back up to a price of around $390 and still put in a new low in the weeks to come. I just want to make that very clear. I'm going to say that once again. We could get a dead cat bounce from $364 all the way up to $388, and it does not mean that the selling pressure is over. We could in fact lose $362 and put in a new low from there. I just want to make sure for all of you longer term investors that you get very, very clear on that. Sometimes a lot of people who are looking to do long-term swing trades or long-term portfolio ads, you guys are trying to buy each and every single significant red day or every single new low, only to find out a couple of weeks later we're putting in a newer, lower price. So just kind of keep that in mind. In order for us to really start averaging in and feeling a little bit more comfortable about putting risk on, we're going to at least, bare minimum, reclaim the 50-day moving average, which is sitting at a price of around $402. Now, I know you may be thinking that, that's 40 points, 35 points away. Why would I, start adding my position at the 50-day moving average versus getting in at a better deal down here? And it's just to say that because if you do start adding here and then we get rejection here and then we trickle down and then we make another push higher and you don't take any profits off the table because you think everything is done, and then 3, 4, 5 weeks later we're putting in new lows down here and you're kind of trapped at this position, you would have wished that, you know, the bull started to get a little bit more stronger and firm up the stock market. Now, I really don't believe that the market is going to go up any higher or make a new all-time high this year in 2022. Realistically, I don't think that we start to come out of this rut until mid 23, end of 23, heading into that 2024, year. It's just my opinion. Again, everyone's entitled to their own opinion, but that doesn't mean that we can't sort of, day trade or short-term swing trade our way to some profits here and there to kind of at least put some food on the table and make some money along the way. Now, just keep in mind, if you are doing shorter term trading, you're going to really want to be well versed in technical analysis from a daily macro perspective, from the weekly chart perspective, even all the way down to the 1 hour and the 5 minute chart, just due to the fact that you can make decent money on a day in and day out basis trading the 1 hour candlesticks and the 5 minute candlesticks. But you have to also be, on top of your risk management. You can't just wake up, see that the market is green, or see that the market is selling off, put on a trade and think that you can come back at the end of the week and you're just going to be, raking in the cash. You're going to really need to be on top of your positions, managing them well, also downsizing and also taking profits a lot quicker. I would rather take profits at 15, 20, 25% right now on a day trade, on let's say a $5,000 or $10,000 position size, rather than trying to hit a home run of 50, 100, 200, 300% trade over the course of 2 or 3 weeks. It's a lot harder to do that than it is to just kind of put your money into the market, take that 10, 15%, kind of call it a day, make some cash flow. Again, all of you guys in my Discord, you guys have kind of seen, I've been significantly sizing down my position sizing. I'm taking gains a lot sooner. I'm not really trying to push the envelope here and try to hit any home runs. I just want to stay afloat through these hard months. So that way, when we do eventually get into another good market that is, able to allow us to put risk on, we can really go full bore. So there's a couple of things that I'm looking at here. Two-sided trade. What I would be looking for here is any type of bounce and rejection at around $370 to $373. I would be looking for the consolidation and the rejection. I will be taking a short on the SPY through 362.33. Again, trying to target that quick move down to 362 and holding a runner anything below 362. I'm going to want to catch that nice good washout to put in that new low. That's the trade that I'm going to want to take. Now, if we do continue this little bounce, let's say, for example, we get some sort of reversal. We get let's say tomorrow we wake up and we have a down market 200-300 points. We get a nice washout. We put in that new low. You've kind of missed that short position now that you could have taken. What I would do from there is allow it to consolidate, allow it to start reclaiming hourly supply levels. And I would look for any close on a daily candlestick over $373.50, which is the 5-day moving average. So just to make things a lot simpler and clean, I'm going to wait to go long on the SPY until we close over the 5-day moving average. If we are trading below the 5-day moving average, I have no interest whatsoever to day trade or to swing trade the SPY long. If we're bouncing and I'm not able to take a trade because the markets are green, it's okay. I'll just let it do its thing. It's that day that we close over the 5-day moving average. Then the following day is when I'm going to look to want to trade a day trade to the long side on the SPY. Until then, everything else is just noise. I'll let the market go ahead and do its thing. And my trade that I'm looking to take right now is that trade through 362.50 into that 362.30s into that 362.17, and hopefully that loss of $362. If we can get that next loss of $362, I think we see a significant new low, right? Enough to make a hell of a trade for the day, or even make your week, hell, depending on your position sizing, make your month. That could be a very, very solid trade. I think once we do wash out and put the new low, then we could be looking at maybe a possible potential few days, maybe even a few week, a little bit of a rally. If we do get a dead cat rally, I would say that more than likely we come up to a price of around $380 to around $390. That's how I'm going to play it. Again, if you guys want more information like this, make sure to join my Discord. That link is down in the description box below. I will see you guys all in the next video, and make sure to like, comment, and subscribe.